Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Thursday, April the 14th. The year's 2022. Let's talk trading. Master of One, Part 5. These videos are for educational purposes only. Your results may differ from mine. Okay, Master of One. I was in correspondence with a trader who was wanting to start trading or continue trading the rat zone. And they were asking me about frequency distribution and then using the dashboard so they can see when pairs are in the rat zone. And they said, well, hey, in the dashboard, it's set to 20, but the rat zone set to 20, but that's the default. If you change the threshold input, it'll then use whatever threshold you want. So if you want it to be 10, 15, 20, 50, I always try to make my codes as flexible as possible and give the user as much control over it as possible. But I was kind of curious why they wanted to do 40. So I just thought maybe, under Master of One, you can master one pair or you can master one method. But as I've mentioned in videos over the years, when you master one method, you have the tool, you have to find the pair or pairs that work best with that tool. Or you need to adjust the tool to work with the pair. That's just how it is. So for example, with the pound dollar, we've seen over the past year or so how the average daily range or average true range has dropped down. In fact, some traders say, hey, you know what? It's only about 70 pips. So if you look here on the frequency distributions, I've got two versions of it loaded here, or two instances loaded, rather. You can see here I've got it set, difference, high minus close greater than 0, 100% of the time. Okay. Now, how many times is it greater than 10? Well, 92% of the time. Greater than 15, 84. Greater than 20, 77. Using 100 or 1,000 makes these numbers come out nicely. So you can see here before we were using 20. So basically 3 out of 4 times it's going to pop out of the rat zone. But if you drop it down to 15, you basically get 4 out of 5. So the thing is, statistically, where would you rather take the trade? But see, this is for the pound, but let's switch over. Let's take a quick look at the euro so you can see what I mean by adjusting the tool. So with the euro, you can see if you use 15, that's 81% of the time for high minus close, but on close minus low, it drops all the way down to 74. So once again, you might want to adjust this on the euro. Let's take a look at dollar yen. Dollar yen here, 70% at 15, 78 over here. But now if you look here at 10, you can see the percentages statistically go up. You're looking at 9 out of 10, almost 9 out of 10 either way. So having a 10 pip rat zone on the dollar yen makes a lot of sense. Because you have to remember, during the day there's a lot of oscillation. And it could be making new highs, pulling back, could be making new lows and then pull back. You don't know till the end of the day what the high and low is, but during the day, that's when you're trading. You can just say, okay, well, if it's made a new high, statistically about 8, 9 out of 10 times, it's going to pull back about 10 pips off that high. Then again, it might make a new high, only pull back 2 pips, and then go on to make another high. We saw that with the pound yesterday. But, the main point is that you want to master, one method, and in this case, it's the rat zone. And then what you want to do from there is you want to find the pair or pairs that work best. Let's take a look at another one of my old trading buddies, the euro yen. So if you look here, you can see 15 gives you basically 8 out of 10 or 4 out of 5 times, but 20, you're back to 7 out of 10. So right here, probably I would say the rat zone for the euro yen 15 looks about right. Let's take a look at dollar Canadian. Now you can see here close minus low is much lower percentages than the high minus close. Oh, if you're wondering why these things are changing up, it's because I don't have all the data loaded, because I don't really look at these pairs that much. So the indicator's refreshing itself, tick by tick here to go back and get the history. So it looks here, you might be looking around 10 pips, because if you go up to 15, that's barely 7 out of 10 on dollar Canadian. So it's got a tighter, much tighter range or rat zone. But you can look here, you can see all these big wicks at the top for the most part. And so this is what this is telling you, high minus close. It's almost like you almost want to make sure you're shorting dollar Canadian off of a high during the day. Okay, let's take a look at the Aussie Japan, because I know Pro likes to trade this pair. So greater than 10, once again, looks like that's the ticket for the Aussie yen. Because for me, I want to put the statistical odds in my favor. So I'm looking, if I can get better than 80 percent, that's what I want to shoot for. And now the other thing, knowing these numbers, you can also start to think, okay, price is in the rat zone, it's leaving the rat zone, but is the day's not over? Has price already hit the ATR? If not, it might reverse. So sometimes it'd be a good idea to start taking profit somewhere, maybe at the next level. Because every time you want to go here, and I'm running up by 5 up to 50, and then by 10 up to 100. You can see you're starting to push it. Okay, I'm trying to see, is there any other pair? And we should probably look at the beast. So you can see with the beast at 20, even up to 25 pips. High minus close, close minus low for the rat zones. You're in that 80% or better, 4 out of 5 times. It's going to pull back. And once again, just looking at these wicks, okay, here's one that didn't, these are a couple that didn't look like they pulled back as much. So, mastering the method, mastering the math here, finding the pairs that work best, and then trading those pairs. Now, one other thing we talk about mastering, master of one. You've heard Walmall and I talk about looking left a whole bunch. And normally we like to look at, say, the 1 hour, or I've even gone to the 30-minute, but just a couple of hours ago, in fact, I woke up, I don't know why, but I woke up around 3 o'clock this morning. So about 4 o'clock, I looked at what was happening here. So right now we're at the 6 o'clock hour, 5 o'clock, 4 o'clock. So you can see right here, price tried to make a new daily high, failed to, but if you look left, you see price did not close above the open of 31.42. And what is this? That's the highest open. And I've talked about the highest open, lowest open trading before. So right there's that horizontal line. Price failed. It went above it and then dropped back below it. And you can see here the first time you had an opportunity to take over, right here, this first time, opportunity to take over 10 pips. This second time, it just kind of paid off like a slot machine. And if you notice something right here, once again, looking left, you can see we have this bottom here. And what did price do? Price came back up through that area and then all the way back down. And then once again, right here, we had some bottoms if you look left. And then price just fell once again. So, mastering methods, mastering chart reading, mastering the statistics, mastering the method, mastering, selecting the pairs that you want to trade for the method. Oh, and I also, I made this chart to post out because somebody was talking about that, find where you want to put your stop and then go ahead and put your, figure out where your entry is based on where you put your stop. And I'm going to update this chart because we were around a different double low here. So this would be 130. So you can see here on the H1 how many closes above. You had 15 so far today and one close below so far, not including the current candle. And then above the 3100, same. Above the 3900, we've had all closes, or 3090, not 39, 3090. You can see we just now dropped below. We may or may not get a close above it. So the question is, if you were to take this trade, where would you want to put your stop? So maybe you want to put it at 3110. And then you decide, okay, I want to enter at the double O or triple O, depending if you want to count the points or just pips. I usually say double O because that's what I'm used to before they went to that 5th digit. But you can see here, just having a simple statistic, which you can just put a little, you can make your own and do it by hand if you want, how many times price, looking at it, closed above or below a particular line. So, fellow traders, remember, master of one, and hopefully you'll be profitable, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.